Bitcoin trend analysis. January 11th, 2026, Sunday. The battlefield has fallen utterly silent. The violent, chaotic war for liquidity that has defined the start of the new year has ground to a halt, plunging the market into a state of extreme, low-volume compression. This is the quiet before the storm. The final calm as the market coils with immense potential energy for its next major, violent move that will likely set the tone for the coming weeks. Looking back, the start of January has been a brutal landscape of failed rallies and vicious chop. This is perfectly captured by the predictive indicator above the price, which has painted a series of violent V-shaped reversals. Brief and hopeful blue ascents, marked by long signals, have been systematically and repeatedly crushed by sharp yellow descents and quick, close signals. The latest attempt at a rally has just suffered the same fate, with a close signal confirming yet another failure, reinforcing the underlying weakness in this market. Today, Sunday, January 11th, the session is defined by this extreme compression. The price is locked in a razor-thin range, pinned directly to the white moving average around the 90,800 level. It is being squeezed tightly between the upper red and lower green Bollinger Bands, a classic sign of immense energy being built up before an explosive price expansion. The liquidation heat map provides a chillingly clear picture of this war. The price is hovering just below a massive, dense wall of short liquidations, a true fortress sitting between 91,200 and 92,300. This yellow band on the heat map is the impenetrable ceiling that has rejected every single rally attempt. Below the price, a significant cluster of long liquidations waits near the 88,100 to 89,000 range. The market is perfectly balanced in a no-man's land between these two powerful magnets, ready to spring. The volume speaks with profound silence. The massive purple spikes that defined the recent conflict have vanished, replaced by a weekend whisper so quiet it confirms that both armies are waiting for a catalyst to initiate the next major battle. The best trading strategy in this environment is one of extreme patience. Trading inside this high liquidity chop zone is a low probability gamble. The highest probability play is to wait for a confirmed, high-volume breakout that targets one of these major liquidation zones. The probability of a sustained trend emerging from this exact spot is low, with a clear bearish bias given the multiple powerful rejections from above. The probability of another violent, liquidity hunting move is exceptionally high, conditioned for continuation. For a new bull trend to be confirmed, the bulls must force a decisive, high-volume breakout above the white moving average and launch a sustained assault on the massive short liquidation fortress, ultimately breaking through the 91,200 ceiling. A successful push through this zone would signal a major victory and could trigger a significant percentage rally. Given the repeated failures, this is currently the lower probability outcome, conditioned for reversal. This is the path of higher probability. If this market structure resolves to the downside with a break below the consolidation floor and the lower green Bollinger Band near 90,000, it would signal the sellers have finally won the war. This would almost certainly trigger a swift and violent cascade down to hunt the long liquidation clusters below, starting with the 88,100 to 89,000 zone. If you're enjoying this video and want to see more just like it, make sure to hit that subscribe button. It's totally free and helps us keep creating awesome content for you. Don't forget to like the video so we know you're loving it, and drop a comment to let us know your thoughts. We read every single one. And if you think someone else would enjoy this too, hit that share button and spread the love. Let's grow this community together. Thanks for watching. You're the reason we do what we do.